Woo! Ladies and gentlemen, are you still alive out there? What a rough week it was in the stock market this week. A very, very tough week out there. If you made money this week, you were either the luckiest person in the world or you were the smartest person in the world. You can decide that, guys. So today I want to talk about billionaire David Einhorn. This man has went ahead and sold off his Apple stake. He's been bullish on Apple for quite a while, and he's went ahead and sold his stake out in Apple. We're going to discuss that and also his short position on Tesla and what he has to say about Tesla, all right? Let's go ahead and get into this, guys. First off, if you are not familiar with who David Einhorn is, all right, he runs a big hedge fund, all right? It's a long, short, value-orientated hedge fund, he calls it, all right? He's worth about $1.5 billion. He's the 44th youngest billionaire on the Forbes 100 list and the 18th highest earning hedge fund manager in the world, according to Forbes. Now, his Greenlight Capital assets under management have decreased quite a bit over the years, okay? From around $12 billion in 2014 to now they're looking at somewhere a little over $5 billion, okay? So that's something to take into account there, all right? Now, David Einhorn's Greenlight Capital has sold its remaining shares in Apple due to a heightened valuation and growing fear of Chinese retaliation in response to the U.S. tariffs, according to the billionaire's third quarter letter to investors. He says, "We ultimately sold because of our differentiated thesis from 2011 has become the consensus." Basically, he's saying his bullish opinion on the company, everybody's adopted that bullish opinion now, and so that makes for downside now at this point in time. He says, "We are somewhat worried about the Chinese retaliation against America's trade policies," he says. Greenlight cut its stake in Apple by 77% in the previous quarter, or 486,000 shares. Einhorn's firm sold the remaining stock on August 31st at $228 a share, which is about where it topped out at. The letter said offloading about $40 million worth of shares there. All right. Since Greenlight Capital's first purchase of Apple in May of 2010, the firm said its investment earned clients over $1 billion. So congratulations on that. All right. Greenlight Capital has had a painful year and did not slow down in the third quarter. The firm lost an additional 9.1% in the most recent quarter, bringing Greenlight's total losses for the year to 25.7%, the letter said, all right? So that's obviously a very, very rough year, to say the least. Like, that's you know, about as bad as a year you can possibly get as a hedge fund manager, down 25.7% there. Now, you know, before we get into the whole situation with Tesla and him comparing it to Lehman Brothers and stuff like that, let's just finish up with this Apple side. He's selling out of his Apple position, and what have we seen Warren Buffett doing? We've seen Warren Buffett buying in, you know, bigger and bigger position. Now, Warren Buffett, on a lot of his shares, he's already doubled that, because Warren Buffett started buying in when it was around $100, maybe a little under $100 a share, and obviously Apple at 220 something, whatever it is now, I think it's over 220. He's doubled his money on a lot of his shares. A lot of other of his shares are up 50%, 20%, 30%, somewhere around there. So it's a difference in opinion there, but maybe the way Einhorn's looking at it is he's saying, we had a bullish thesis around this company, and now it feels like everybody on Wall Street has this bullish, you know, thesis around Apple. So we look at it as now we just want to sell out of this stock and get out of it and take our profit and run. Now, he could also have other reasons to be selling, okay? Sometimes you'll sell a position you're up big on because you want to put money into some other positions maybe you're down on or something like that, or maybe there's just a place you feel like you have better money, you know, to go toward and things like that. Like, I make moves like that sometimes. I'll sell a stock that's up big, not because I don't believe in that company anymore, just because, you know, I may have another place to put the money. So he's obviously having a very tough year, so maybe he's looking at it as, I'm going to take my profits at Apple here, sell off this stake, go ahead and put this money into other stocks he feels will do better. We'll have to see what happens there, but obviously he's had a struggle of a few years here. The guy's still a billionaire at the end of the day. You know, we could say, is he losing? Is he losing it? Is he you know, making just bad decision after bad decision? Should he hold Apple? Should he ride that up to 300 plus? Maybe it's going to go to, I don't know. There's still an argument to be made right now that Apple is still undervalued, but you could have made a lot of arguments about Apple over the years that the company was undervalued. I think it's always been a stock that has been disrespected by Wall Street because just because of how big it's gotten, and they, you know, were kind of like one of the first companies to blow through a $500 billion market cap. They were the first to blow through $750 billion market cap. They were the first to blow through $1 trillion market cap, and I think Wall Street's always looked at it as, How much more upside could there possibly be in Apple at this point in time? You look at this forward P ratio and you look at, where ASPs for iPhones are going, you look at services revenue, and there's still a lot of reasons to be bullish Apple over time. So we'll see what happens there, but he got out of that position, all right? Next, let's talk about Tesla. Einhorn on Tesla. He says, like Lehman Brothers, okay, which I'll explain to you if you don't know what that is in just a second. Like Lehman, we think the deception is about to catch up, he says. Okay, so Lehman Brothers, if you didn't know, this was a huge global financial services firm. They went belly up in September 2008, and this caused, a massive sell-off in Wall Street. This was part of the reason that caused an acceleration of the Great Recession that we went into. That massive recession we had. They were definitely part of that. Okay, so to compare them to Lehman Brothers is one of the more disrespectful things you can do literally on Wall Street. Okay, no one wants to be compared to Lehman Brothers. All right, so he says, like Lehman, we think the deception is about to catch up to Tesla, Einhorn said in a letter to investors on Friday. Lehman threatened short sellers, refused to raise capital, it even bought back its own stock, and management publicly suggested that it would go private. Months later, shareholders, creditors, employees, and the global economy paid a big price when management's reckless behavior led to a bankruptcy, he says. In May of 2008, just a few months before, Lehman Brothers declared bankruptcy during the heart of the financial crisis. Einhorn said at a conference that the investment bank was a risk to the financial system and questions its accounting practices. So Einhorn was 100% right on his Lehman Brothers thesis there, okay? Now, we're going to get into my opinion against kind of his opinion in regards to Tesla in here in just a second. Einhorn said, like Lehman, Musk has bluffed about the company's financial position. There are many parallels to Tesla. In 2013, Tesla was on the brink of failure. Tesla's cash reserves fell to a dangerously low level, and CEO Elon Musk secretly and desperately tried to sell the company, he said. Rather than communicating the truth to shareholders, Mr. Musk bluffed his way through the crisis, he says, okay? He says, he puts the stock in what he calls a bubble basket, all right? Now, let me go into this. I'm actually going to erase this on the board. Let's take a break for a second. I'm going to do a full layout here of what he's saying versus my opinion. Alrighty, guys, I went into his kind of like bearish thesis here and what he's saying, and we're going to kind of digest this and talk about this, okay? So he's comparing Lehman Brothers and Tesla, saying these companies are similar. So he had a very successful short position and belief that Lehman Brothers was going to fail. He thinks he's going to be right about Tesla as well, okay? So he says both threatened short sellers, which both did, kind of threaten short sellers. Obviously, Elon Musk has said, shorts have a certain amount of time to cover before they lose their butts, things like that, okay? And he's gone back and forth with the shorts many times. He says both have refused to raise capital, which this one, I don't know if that's 100% true, because Tesla hasn't necessarily refused to raise capital. They said they shouldn't need to raise any more capital, but I don't ever remember Elon Musk saying, he doesn't ever want, he's never going to raise capital again. He plans to never raise capital again. I think as of right now, what the company's focus is, it's not around raising capital, it's around building the business, making it profitable and things like that, okay? Number 3, he says management has suggested going private. Yes, definitely both situations, okay? So he predicts that they're going to have a large revenue and earnings disappointment in Q4. So that's not this quarter they're going to report here in a few weeks. That's actually the quarter they'll report in late January, early February, okay? It says a large revenue and earnings disappointment. First off, Lehman Brothers and Tesla are two very different situations in the respect of Lehman Brothers had products no one wanted, okay? No one wanted Lehman Brothers products out there. You couldn't find a person to buy Lehman Brothers products in 2008 or were interested in Lehman Brothers products. Like everybody was kind of flooding away from Lehman Brothers. They were like, that company might go down. We're hearing rumors about it. We don't want Lehman Brothers, okay? Tesla has the strongest demand we've pretty much ever seen from an automaker in terms of a newer type automaker that comes in a space like this, okay? Their numbers are now starting to get to a point in the United States of America where they're starting to compete with the gasoline guys as far as like Honda and stuff like that. Like they passed all the American companies in terms of the car numbers they're doing. They're starting to come up to Honda numbers and Hyundai type numbers, and those guys that sell, the cheaper automobiles that are, gasoline automobiles, ICE automobiles, okay? So Tesla has massive demand. Lehman Brothers, no one wanted a piece of them in 2008, okay? So there's difference there. Also, here's the thing he's saying. He's talking about large revenue and earnings disappointment coming in Q4. The earnings disappointment is a possibility. I won't really attack that. Where I see an issue is he's talking about the company's going to, have a large revenue disappointment. If the company felt, and Elon Musk felt like they were going to have a huge revenue disappointment, why wouldn't he release the $35,000 Model 3, okay? If it was about revenue and he was scared about revenue, I think he would just come out with a $35,000 Model 3, get a massive amount of orders in there, get a massive amount of people wanting that car, right? So the way I look at it is if the company was desperate for revenue, they would have already, went after Model 3 in a big way. I'm talking the $35,000 model, because right now on the website, you can only get $49,000 plus dollars, okay? So if you're getting a Model 3 right now, you're getting it for $50,000 or $60,000 once you get all the things you want and whatnot, okay? So, you could attack that way. You could say if they were worried about revenue, they would focus much more on ramping the solar business and things like that in a much more rapid time. So I'm not 100% convinced that they would have any type of large revenue disappointment in Q4, because I think if they really wanted to just boost their revenues numbers up as much as they could make some moves. They could literally release a $35,000 Model 3 right now and just have orders go crazy. They could, get the solar roofs out there, however much they cost and whatnot. So I don't know about that. And once again, Tesla right now is not planning on raising any more capital. They've come out and said that. But as far as refusing, I don't know if I would take it that far to say this company is going to refuse to raise capital in the future. Maybe they do change their mind, and Elon Musk changes his mind a lot. We know that, right? Maybe he does change his mind down the road and raises more capital. So I don't know. I want your guys' opinion on this. Do you think it was a smart move to sell Apple now by him? Do you think it's a smart move for him to short Tesla? He's been shorting Tesla. He's been short Tesla for a while. I remember him and Elon Musk going back and forth. I think this was like 2 or 3 months ago about shorts, and Elon Musk sent him shorts and whatnot. I want to know your guys' opinion down there in that comment section. Let me know what you thought about this. Thank you for watching and have a great day.